Hey guys, so wow, today was a wild day. So this has got to be one of the biggest, just kind of wildest pumps I've seen in I don't know how long, probably of this year. I mean, maybe I'm forgetting a couple days early in the year, but man, this was incredible. So at one point we had climbed about 87 points, or about $8.50 in an hour and 45 minutes. That is an insane amount of movement in such a short period of time. Just to put in perspective for you how insane that is, our general average 10-day range is about $4 to $5. Or about 40 points. So basically, in an hour, we put in our whole day's range twice. So basically, over 2 hours, we put our whole day's range in twice. Just incredible. So why did that happen? That's a good question. So the UE rate, the unemployment rate, did come in slightly higher at 3.8% than it was expected, but markets had a really negative reaction to that data. So the question is, what's going on here? So my two thoughts are: one, markets initially reacted to the non-farm and the average income or hourly rates data and dumped on that, but then they kind of processed the data a little bit better, and they said, oh wait, though, you know what, UE went up, that means we're not going to get a rate hike next month because it's working. Unemployment goes up, inflation comes down. So that makes a little sense there. My other thoughts is that because it's Friday, VIX got crushed like usual, and we saw all the shorts cover. So let's kind of see where we're at here. So basically, since, end of June, we've been in this red bear channel. So today we broke our demand at 425.8 finally. We also closed over 427.41 resistance. So basically, we decided that 421.44 is major support now. We broke our over a month and a half almost, bear channel right here. With breaking this bear channel right here, we should look for an upside move. So this is playing out much like this move right here, where we get a breakdown and then we're going to pop out of it. So with this bear channel broken here, the question is, where do we go next? We took back the 200 and the 8 EMA. First time we've closed over the 8 EMA since September 14th, and only the third close over the EMA since September 5th, so about over a month. We've only closed over the 8 EMA 3 times in a month. That's crazy. So basically, our next major resistance is going to be the daily 20 EMA at 423.23, which is also a supply. If we break through that, my target remains 436.14 and 436.82, which is also the 50 EMA. Break and close over that, and then I'm looking for the bigger breakout. But remember, and we'll go over the weekly to talk about this here, from a weekly standpoint here, we can go all the way up to 446.5 next week and still be in an overall bear trend since June. So now we did break our weekly bull channel. Now this is that bull channel that we've been in since October of 2022. So here, looking at this now, we got a couple things going on here. We have our blue bear channel that we've been in since, again, June. However, we have a really short-term extreme bear channel that we've been in since the week of September 5th. Now, essentially, we are going to break through that, because if we can't open under 426.81, likely, that'd be a $3 gap down, and that would be incredible. And again, we would have to not only gap down $3, but we would have to never see any sort of green throughout the whole week, and that just seems incredibly impossible. So again, we're going to break through that. So what that does is, with having put in, because we came down, we took out 427.05 supply. Not only that, we put in a new demand right here at 427.31. So basically, we took out a supply and put in a new support there, which is very bullish. We also double bottomed with a back-to-back doji off of the 50 EMA support. So again, my upside target is 432.76 and 437.5. I would still hesitate to be too bullish until we retake the weekly 8 EMA. There certainly is a potential where we double top here and go right back down, but I would be careful playing for that. Now, we do have FOMOC minutes on Wednesday and CPI on Thursday, so there could be a fair bit of volatility at the end of the week. Beginning the week with banks closed on Monday, likely could be some painful and small range trading, but again, I actually lean bullish here now. Looking at the daily here on futures, same thing. We came down, had a hard bounce right off 42.63, took out 43.18. Now, the one difference here is that we could not quite get through 43.50 and hold. So with 43.50 being our resistance, this is, if you go back to the 26, we got 1, 2, 3, 4, 5, 6, 7, 8, 9 days, all closing in the same, about 100-point range. So to continue to the upside, we're going to need a closure over 43.50, and then our target becomes 43.82, which you see right here is the 100 EMA. That will be major resistance. If we get through that, then we're looking at 44.57. However, in the chance that we double top and go right back down, 42.63 is going to be a major resistance to watch as we go forward. I would not be looking for any sort of short opportunity until we can close under that level. That is such a major support level. Now again, here a lot going on in the daily. What we did or weekly here, we broke through the COVID or the bull channel that we've been in for a year now. So this is what we're left with here. We have the black bear channel from a weekly standpoint that we've been in. And now if you go to futures here, we can actually pull this back just a little bit there. And on futures, we've actually been in this since basically beginning to middle of June. So this is a really nice bear channel that we've been in for basically 3 months now. However, we have our extreme bear channel that on futures, we have an upside of 43.57, so about 12 points. That if we hold under that through the whole week, we are still in an extreme bear channel. Now, we came down and took out 42.89 supply, and we also put in a new weekly demand. So it's 43.25 now being a new weekly demand. I would not be short until we close under 43.25. If we can close under 43.25, then we're again looking at the 4100s. But our upside target is 43.79, but a closure back over 44.11, which is the weekly 8 EMA, and we certainly could move up here. Now again, on futures, we can go all the way to 45.25 next week and still be in an overall bear channel. So again, be hesitant with how much you're committing to the upside if you are playing it. Going over to Qs here. Now this is what I've been talking about for a while here. The Qs has pretty much been, I would say, leading our charge. So again, I said this yesterday that if the Qs do not go with us, we will not sell off. And we saw it today. The Qs, and even at open, we had AMD started off and Google was the two that started it off. They did not go red, and they refused to go red. And then tech started coming in, and there it was gone from then. We finally broke out of our massive range that we've been in here and closed over it. We came up to our daily 50 EMA, touched it, and rejected. That is our key level for next week, 365.1. Close over 365.1 and 371.9 to 372.7, our double demand here, is 100% in play. Now again, we are in that overall bear channel since June, and we have quite a bit. If you go up to the weekly here, we have movement all the way up to 373.4 to still be in an overall bear trend. Now, again, keep in mind here that we have 1, 2, 3, 4 hard rejections off this same trend line. That makes it an extremely strong resistance. So if we do push up 373 point, or what is it here? 373.2 area, is going to be a major level to watch, and that will be hard to break through. Now, we did get a new demand here at 356.66, which took out that 359 demand. So same thing here, though. If we kind of zoom out and we just put this into perspective here, realistically, we have traded and closed inside of since June 12th, the week of June 12th, for basically 3 months now, about a $27 range. This is just a bunch of range here. Now, again, you could take this, if you zoom out here, you could take this as a big bull flag that's going to break out. And you can also take this as a potential carrot top that is going to go lower. But again, the more I look at the charts and the more that we bounce like this, unless FOMOC minutes and CPI can do it, I really am starting to lean bullish going into the end of the year. And which is crazy because last week I never would have said that. I would have said be extremely cautious in any sort of long. But, you know, markets are wild, markets change. And unless we see a hard bounce to the downside or a hard reversal to the downside next week, honestly, it's not looking good for the bears. Now, I will say this is the bulls, or the bears rather, last stand. You can see on the VIX, we have the integrity of our bull channel right here that we've been in since August 31st. We came down, we back tested 17.28 demand, and we held. We also touched 19.79 supply and rejected that this morning. But if the VIX can hold 16.88 and 17.28 Monday morning into close, and it closes back over the 8 EMA, which so back in the 18 area, this was strictly a short squeeze, strictly a relief bounce, and we are going to continue to the downside. If the VIX closes under 16.88, I full-heartedly believe there are far more upside to go. However, again, this will be a critical level to watch and a critical chart to watch next week. And I said this yesterday too, that basically this unemployment rate was going to determine where we were going next. As of right now, it appears the bulls are going to take over and they are going to push us higher. So again, I want to watch how this plays out. I really wouldn't hate to see a bull trend because honestly, you know, trading over the last month in this bear trend has been terrible. These technicals are just unbearable at times, honestly. You know, if you look at this whole week was a wild week to trade. You know, today we had a $10.50 move up, which is just incredible. All by itself, that's incredible. Just to have that in 1 week would be incredible. But outside of that, you know, we had Monday, Tuesday, Wednesday, Thursday, which were basically just consolidation days where we had just nasty technicals. You know, on Wednesday, we had that massive drop on JOLTS data. We had the huge reversals in the week. You know, this was a week that we just basically consolidated, and honestly, it was really, really hard to trade. And from a short standpoint, if you're playing the shorts, at least for me, I found that the last month has been really difficult to trade because it felt like every single short opportunity that came basically had 3 or 4 fake opportunities before the real trade came. You know, even this week I lost on back-to-back shorts on Monday and on Wednesday. Monday, thankfully, I was able to get in 2 shorts after that paid out really nicely. But on Wednesday, I wasn't able to get into that short because I just didn't have the conviction anymore. You know, we're seeing, but it played out perfectly like I was looking for it to. You know, we're seeing these really, really hard technicals to get in front of, and you know, at least on the short side, I feel like trying to be early and predict where it's going to go without waiting for confirmation has been not easy to do. And I would say 75% of the time, if you're early and you don't wait for confirmation, you're buying in on a fake trend. So I actually kind of warrant a little bit of upside. I wouldn't hate to see a little bit of a bull movement and get some, you know, small bullish range days or some small bullish uptrends. Now, again, I don't want a day like today where we pump $8 in 2 hours, because that's just that's not trading. That's pretty much FOMO. I mean, if you bought in on that, yeah, maybe from a technical standpoint, you can say we broke X, Y, and Z, resistances, blah, blah, blah. But honestly, I mean, that is strictly you're buying and you're hoping it's going to continue up. That's not, really technical trading for me at least. So, all right, guys, I hope you guys have a good weekend, and I will see you guys next week.